Hi, I'm Michael Owen and I'm thrilled to join Weeks as their global brand ambassador. In football, success comes from precision, speed and strategy. Every move matters. With 1,000 plus trading pairs, you can trade spot, futures and more. And security? Weeks leads the way with Plus, a 1,000 Bitcoin protection fund. Join me on Weeks, where new wealth is made.
All right. Welcome, everybody. This is Adrian Zdunczyk, CMT Charter Market Technician. Welcome. This is an official welcoming to you guys, to everybody who's watching and who's listening, because you've just joined on the 7th edition of our Trading Congress. And I'm here to welcome not only the most important viewers and listeners who have been here with us for many years, who have been loyal within the Burbness community. I'm also here to welcome each and every single person who is new to watching us, who is new to the Burbness community. And by doing so, I also want to invite you to join me in the welcoming our incredible partners and sponsors, because you're about to get a full week of proper focused education, market insights, practical guidance designed to help you become a better trader, designed to help you, just get a little bit better, retrieve a little bit, just retreat, make up, recover after this absolute carnage that's been happening over the last months. And this year, Trading Congress is supported and is partnered and is sponsored by our incredible partners and friends from EdgeX and from Weeks, who made this entire edition free for everybody to watch. So huge shout out to them. That's an incredible achievement. They are incredible people. I know them in person, and I wish I could say that about everybody in this space, because there are a lot of bad actors, which is why it's so important to know who's who, and it's so important to give a credit where it's due. So huge shout out to Weeks and huge shout out to EdgeX, incredible people. So without further ado, this is something, everybody, that is annual, right? Trading Congress on its own is an annual session, is an annual event designed to truly make you a little bit better than before you join, right? The whole purpose of you joining the Trading Congress, this free virtual trade camp, bootcamp for traders to, again, find your own kind of path that is the right for you on the trading side. Because frankly speaking, this market has been absolute carnage. Like I said, it's been Bitcoin is down on the year. Ethereum is down on the year. Every single altcoin is pretty much down on the year, except maybe for a couple of outliers. This market sucks. Overall, it does really suck as much as it gets. And I've been here almost for 9 years, enough to say that. All right. It's been definitely one of the most discouraging environments, not for me, for everybody else, right? I was lucky a couple of times, simply because, How much luck there is truly in this and following your own path, well, that's a different story, right? Because I had the strategy and just simply followed it, which in the end allowed me to become much more resilient and much more stabilized on anything portfolio related this year, simply because I follow my own steps, right? But how does it all connect for everybody, who truly hadn't had their own plan? Well, that's a different story, right? Because it's been full of shenanigans. It's been full not only of meme coins, right? It's been full of all the different um, value extractions, that have been happening, and ETFs, have been really taking a lot of heat lately as well. There's been an absolute run as well, onto liquidity side, which is completely evaporated out of this market. And I'm still surprised, how people manage to get on the leverage, and still so many leverages are being wiped out on a daily basis with massive, massive slides, such as the one from 126,000 all the way down to 81,000 or to 80,700, right? What an absolute carnage. A very, very deep retracement, deeper than majority would expect. Some people already call that a bear market, and there are a lot of reasons to actually claim so, but that's another story, right? However, what really matters is within this context, within all those hardships, within all of this, the facts, that this market has been absolute turmoil, not only for crypto, but also, frankly speaking, for a lot of other markets, right? Which is seem to be a little bit thrown on the cover, on the carpet, if you will, right, by decent performance in the S&P 500, which is something that we're gonna talk about later on today as well. However, what truly matters is that you're here, because if you're here, it means you are here for a good reason. It means you're watching this because you want to be a little bit better today after this session than before you joined. And well, this is gonna give you an incredible opportunity. The best part is that this is going to be free. Every single trading congress that we had, and this is the seventh edition. In seventh edition, just think about it for a moment, right? 7 editions of a free virtual trade camp for traders designed to help you be better in whatever shape or fashion you name it, right? Perhaps some of you just want to quit getting wrecked, because you've got wrecked so much that you just want to stop whatever you're doing wrong in order to be able to make it up and get back on your feet basically soon after, right? And it can be just basically about getting different opinions from people, right? From people who are actually backed, who are not really like empty, hollow, I should say, right? Who are not empty inside. Those are the people who have skin in the game. And well, luck has it that me being the only charter market technician from Poland, this places the Burbness as one of a kind, unique place, especially for crypto people, to come and learn and grab the actual accredited knowledge, right? And there's way too little of the accredited knowledge. There's way too much of the misinformation. There's way too many bad actors who are here only to extract value from you, who are only here to rip your backs and basically steal your money and go. That's what happened to me many times. I got robbed, scammed, exit hacked, basically like hacked, exit scammed. My friends stole money from me and ran away. I got blown up. The stop losses didn't work. My accounts were completely evaporated several times. I ran multiple accounts to 10x to 20x, then to only later find it out that it was blown out simply because the stop loss didn't work and stuff like that. So each and every single mistake that I've made along the way could be probably packed in a book of this thickness, which is pretty large. This is going to be a couple of thousands of pages of only of my mistakes, right? So it's safe to say I'm pretty well grounded in this space. I know what works, I know what doesn't, and I know how many times I simply suck the trading in order to be able to get to the profitability, in order to be able to get to the peace of mind, in order to be able to get to now send the elevator down to everybody who needs it and do it for free. All right, this is quite a big thing, and the whole legacy of the 7 past editions, the 6 past editions, have always been about the tens and thousands and hundreds of thousands of people who have received free help. They managed to successfully recover. There are multiple stories and testimonials left from everybody who participated in that, and this literally changed their mind. There are a lot of messages I'm getting about the millionaires, the self-made millionaires who were truly praising the help that they received within the Burbness, also on the Trading Congress. So if that's you who wants to be inspired to be next and send me a best message like that next year, well, you might want to stay for the entirety of the trading congress. This is going to last 7 days. This is going to be quite a challenge for to take up. If you're taking trading seriously, because there are no trolls allowed policy, no idiots are gonna be there to distract you, no bots, no scams. It's all filtered down to help you get the fair treatment behind closed doors, no trolls, all the idiot weeds out basically. And this safe environment is supposed to help you be better. All right. And with that in mind, we're gonna have a little bit of a brief market check, like I said, because the turmoil is one thing, right? However, the whole context on the microfinancial side, on the technical side, on the fundamental side has been quite upside down. Has been quite belly up this year for many reasons. We're gonna touch upon that in a second. We're gonna talk about the cycle peak situation that happened because not many, well, hopefully all of you know, and hopefully all of you watched. However, if you didn't, then full disclaimer, there's been a whole series of posts that I did about the cycle peak projections, right? And you can only get it so many times right. You can only about guessing the future, about predicting. There's always a factor of luck a little bit. You have to be a little bit lucky to land exactly on that uh, prediction, accurately. However, if you use reliable data, you're always going to fall within the confidence bands. You're always going to fall within certain area of predictability, likelihood, probability that you have the best chance of finding the right answer, right? And that's what truly matters. You don't have to be perfect. You don't have to be right. You don't have to be ideal 100% of the time. Well, me being the trend follower, as a matter of fact, it confirms by the numbers, by facts, by academic studies, by scientific methodology, and so on, that it only takes, in my particular case and all the trend following methodologies, 30% of the time to be right in order to compensate for all the tiny small losses accrued on the way. So in the end, it's not about being right. There's this incredible book by Ned Davis Research, this incredible long story, very long track record, I should say, hedge fund from the last century that still performs, and they really blend a perfect mixture of technical analysis, of fundamental analysis. They use both microfinancial data and timing factors coming from the market momentum and so on. And that's what truly matters, right? So this is not really a choice between the fundamentals and the technicals, because there's a whole thing that works as a blend of this, that when one encompasses and encapsulates, another in terms of both create this healthy ecosystem for making money. Because honestly, if someone is making money without technical analysis, just keep on doing whatever it's doing, right? Keep on doing whatever is doing the job and keep on doing whatever is working, because just maybe you're an absolute born, talent that is one in the world, that is unique, to an extent that there has been no one like you ever before in terms of, the skills that you have. You might be an exceptionally high intelligence quotient person, uh, and it all doesn't really matter, because if you found what works for you, just keep on doing this, right? If you found this golden goose, you don't have to search for a holy grail, because they don't exist. If you found a very good strategy, if you found a very good feeling, even though I'm not a big fan of that, there are people who are absolutely great at guessing. They have this natural skill, this natural inboard gift from God, basically, to be able to guess things right. Right? Some people, there used to be in our history, prophets. There used to be people who foresaw things before they happened. Some people, refer to some of my posts, that they say I'm prophet. Well, there is a difference in using data and seeing the future before everybody else, right? It's a little bit different. But what I mean is that while being given an access to filtered, decanted, improved, clean, polished financial knowledge, put it right on the table, right in front of you, with all the access to indicators, strategies, scanners, charts, articles, PDFs, tutorials, courses, and so on. As long as you're given an access to it, why don't try your luck and search for financial freedom? Right? Because that's exactly what you find in the Birbness. In the Birbness, we all believe that the financial freedom, it should be accessible and available for everybody, everywhere, regardless if you are from the third world country, if you're from Europe, from States, from Australia, from Asia. It shouldn't matter where you're from. It shouldn't matter what sex you are. It shouldn't matter what person you are. It shouldn't matter what skin of color and so on, color of skin. It should none of that should matter, because each and every single person on Earth should be able to get access to financial knowledge in order to perhaps break away their financial chains if that's what they want. In reality, quite a vast majority of people are already reluctant and resistant to taking out the steps, because we as people take the status quo bias, right? We tend to preserve what's already there instead of searching for the uncertain. That's um, our internal bias that we kind of just have within ourselves. All right, that's our some sort of like a sociological, like a defensive, if you will, right? We don't search for an unknown if we know what's the current, right? And that's something that also blocks the growth. However, that's also why the growth, the financial freedom, the money, getting rich, whatever you name it, comes at a risk, right? If you don't want financial freedom, keep it as it is. If you want to change something, you have to be ready that 100% of the time you're going to be exposed to risk. There is a chance that you're going to fail, and this chance is 100%. Right? There is a chance that you're going to get rich, but this chance is asymmetrically lower. So all in all, what truly matters is that being given this access to the financial knowledge in this particular session, and the next session, and the whole range of the sessions throughout this week within the Birb Nest as well, because everybody who participates in the Free Trading Congress gets their free membership for the time of the Congress. So you can enjoy, get as much knowledge as you can bear, handle this, and then go have fun, get rich, and then spread the word to inspire others, right? Because that's the only thing that people need. People need others to inspire, because that's the only driver to make them believe they can change too. So in the end, this trading congress is going to be themed around how to beat the bar market, right? Because we've been in the market turmoil for quite some time already, especially on the crypto side. Next year is a calendar bear market. Like I said, I'm going to expand on this shortly in a second. But all things considered, the prognosis for the next months to come isn't positive, isn't optimistic. And I know you would say that, it overall sucks this year already up until this moment. So how can it get any worse? Well, the answer is, if you think it cannot get any worse, then the answer is yes, it can get far worse than what anybody can expect. If you see an altcoin that is down 99% and you buy into it simply because saying it cannot fall any lower, then guess what? I've seen hundreds of examples of coins and investments where 99 investments went down another 99% from that moment. And then they down and 99% even from that moment, and so on until they reach the zero. If you don't remember, you don't have to search far. You can just go ahead and look at Luna chart from 2022, or Terra, which evaporated the entire ecosystem, and L1 and so on, right? So never take things for granted. However, by being in the market, you deliberately agree that you expose yourself to black swans. The only way to avoid getting black swans in the market, the only way to avoid getting bear markets, the only way to avoid getting wrecked, well, is risk management. And by risk management, some people would say not being in the market. So the only way not to experience a black swan that is by the definition unpredictable is not to be in the market. Or if you want to diminish the risk of getting wrecked because of a black swan, you can get into the market only for the time of a transaction. You don't have to sit out and buy and hold basically 99% down portfolio until it recovers. It's fine to make trades, to jump in and out when the time is right. And that's the toolkit that is provided to you by technical analysis, especially when it's proven and taken to the academic, scientific, and mathematical levels. So, all in all, without further ado, I do highly recommend that we take a look at a couple of charts, because in order to provide the context, we will need to look at the charts. The good thing about looking at the charts is that I don't have to read 50,000 newspapers. I don't have to go and search journalists what they say about Bitcoin. I don't have to go and read 20,000 blog posts or 20,000 different accounts on Twitter. I don't have to do any of that, not because I'm lazy, but because the charts, they already include all the essential information. They are telling you the story, and they are telling you the story in the closest proximity to the truth. They're as close to the truth as you can get, less the private insider information, right? Because there are people like the politicians, like the armies, the troops and so on, that sometimes they are having like a secret, very very top secret situation that they cannot really disclose to the public, right? How so? Less this insider information that, of course, shouldn't not be tradable. That by definition is illegal to trade based on insider information. Yet so many people in the politics and the Congress, be it instead the Congress people in states, for instance, but frankly in every other country, they are given access because they are regulating the markets, they are regulating the countries, they're passing the bills, and they have insider information before it sees the daylight, and they make trades and investments based on that. It is illegal. Should be condemned, and it should be definitely taken to the legal stance with everybody just simply ignoring that, right? But that everything else but this situation is already in the chart. So we cannot predict it's not a crystal ball. You cannot predict what Donald Trump is going to say tomorrow. You cannot predict what Elon Musk is going to say tomorrow. But what and that's what should be enough, is the story leading up to here, right? Such as the 2023, for instance. If we take a look at 2023, then this is where we saw a reversal. Like late 2022, the FTX collapse, of course, would happen early in November. Then we would be looking at at an overall swipe below like $16,000. Then this is where the market bottom is, right? This is where the peak of the depression happens, and it's only until all the leveraged positions puked out, basically all the traders that could have given up, they gave up already. It is only then that the market can truly return, because all the selling pressure is gone. And if all the selling pressure is gone, if all the supply in the market is gone, then this is where demand takes over. And this is by the rules of economics, by the rule of law of supply and demand, basically that if the demand exceeds supply, the prices go up. As simple as that. All right, a very simple and sound premise of technical analysis that really comes from economics. So in the end, when we look at the past from the 15500s in late 2022, and we are now 3 years later in the late 2025, what are we on yet? We are at the level where 15500, all right, were taking us all the way in the region of 126, 200, which was the local peak. And if we are to give you like a perfect combination of where we are right now, this is 86 400s, 86 400s, which gives us 557. This is 5.5x, 5.6x approximately versus the price of the market bottom. All right. So which is what tells us that, okay, by holding Bitcoin from the bottom of 2022 all the way up until now, you're still in a 457 profit, right? The current worth is 5.6x versus what it was at the bottom. When we measured that to the peak, right? To the peak, the whole performance bottom to the peak was equal, to give you the accurate numbers, to 10x. I apologize, a little bit less. It was 126.2 divided by 15.5. It is 814%, right? So 8x, north of 8x, it was worth at the very peak, right? So some people would say, okay, this is a bear market, but well, I was very vocal about this being a bull market in January and February 2023, when there was a massive reversal, right? This massive reversal happened. Actually, let me pull it up for you. This massive reversal happened based on technical analysis, right? So this technical analysis was something that in the end was used to anticipate certain market reversals. And this is something that we indeed did. So let me pull it up again for you, so that you know that it is possible to use technical analysis to make money. And it is possible that if you do it well, then you're actually going to make also accurate decisions, right? So let me pull it up for you right now, right here. Um, Here we are. Right, this is the post that I made. This is the post that I made in February 2023. All right, it was 1:26 a.m. Not bad, which is quite late. A trend, not a correction. From a technical standpoint, the bear market is over. Bitcoin sees a persistent trend shift confirmed by price percentage traveled, volume spikes above the average volatility, time above the 200-day trend, and improved breadth. 2023 look up. This is where we were at that time at 24,800s, right? This is where we have seen even before 200-day moving average kind of like flatten out this our own proprietary Barbicator Pro trend line, 200-day basis. So a persistent trend shift because it was a little bit more sensitive. So in the end, you were looking at a significant technical change of the market rotation to the upside. And without this, without having a glimpse into the very market pulse, you're doomed to use fundamental analysis. And the fundamental analysis in cryptocurrency markets can be extremely deceiving. It can be extremely deceiving, not because I say so, but because it may give you a false positive. It may give you the fact that, well, just as if it was in the way more securitized stock market, approach, you could expect that if a company makes it up to S&P 500 index, where it is top 500 market capitalizations, stock markets, companies in the US, then this is some sort of like a votum of trust, right? That this is some sort of like a label of trust. And if the market is, let's say, undervalued, if the stock is undervalued, it means that it's most likely going to be overvalued in some time, which means that you might want to buy low. However, in such unregulated markets back in the day, and now it's changed a little bit, which is why we see a lot of things that we see today. We are looking at a very different type of a market. We're looking at a very fast-pacing, emergent, dynamic, and volatile market. And because of the volatility that has been present across crypto, this is much more of a momentum investment market rather than fundamental investment market. So just because a coin has good fundamentals, it doesn't guarantee that it's going to make money. In fact, 99% of coins with good fundamentals, they're down like 50-60% this year. All right. So, and if you kept on technical analysis based on investments, right? Momentum investments based on, again, the momentum, the price of change, the rate of change, the momentum itself, which is the price derivative, or the trend lines, simple trend lines, the directional trends, you would have made so much more money than just trying to buy something that was undervalued. Because, like I said, if a coin is undervalued, it may be even more undervalued. And that's what happened to a lot of coins this year, right? So there is this whole absolute edge in using technical analysis for investments that fundamental analysis doesn't have enough of a toolkit in order to trigger good investments in a cryptocurrency market most of the time. All right. So with this case, Bitcoin is at 86,500, and we have lost the significant flattening out or even down curving 50-week moving average that can be placed close to basically on the same position, same range as 200-day moving average, which is basically the bull market trend line. All right. The bull market trend line, like I said, started rising with a lot of luck, this traditional luck, in May 2023, and it was rising up until November, and it's not rising anymore. And this is the first instance where it's not rising. And when it's not rising, it means that there's an inflection of trend. So this trend of Bitcoin is changing, it's rotating, and it's rotating to the downside. Not because I say so, but that's where we kind of like point out right now with the current nose of the trend, right? It's pointing down and down. It's not flat, it's flattening, yes, overall. However, it's pointing downwards right now. We have seen a significant breach of out of 126,000 down to 80,000. And that stands for about 37% retracement, if I'm not mistaken, right? That is a very deep correction. This is way too deep for any short-term regular correction. This is way too deep for an even secondary correction. This is a correction worthy of a bear market, and not the one that is going to continue dipping forever, but it's the one that is going to give us probably a little bit of a rebound into the mean reversion. So it's sooner or later we're gonna make it back towards like $100,000. Here right now it's even $102,000. So I would be very surprised if we don't go up there. If I were to place my guess, it's still likely going to be in the region of 105, 110,000, maybe a little bit more, but I wouldn't expect much more than this. Simply because the mean reversion happens, that the markets oscillate around the averages become the benchmark, the Amcor, and if we breach it to the downside, then this becomes a resistance, and this is something that many people would anticipate, place their sell orders, and this is going to create the selling pressure around that area. So we can expect that if we pull back into the $100,000 area, there's going to be some selling pressure. All right, especially from bigger money checking out. So if we are then to check on something else, if we are there to check what's been happening on the overall like Dow Jones Industrial up until now, of course, 46,200 is right now on the right hand side. This is our focus after significant push in 2025, of course, following the 2025 April crash that was induced by the trade war, by the tariff war. We did move quite nicely, right? Almost 20%, 40750, approximately 40600. It seems all the way to 47,500. I'm looking things up right now in terms of the actual performance on the S&P 500. We're going to check on it in a second. On a year-to-date basis, it's 10%. All right, Dow Jones Transportation. See, it's definitely underappreciated versus what it was last year. So there is a difference. There is dissonance between the Dow Jones Industrial Average and the Dow Jones Transportation Average, and this, according to the Dow theory, is something to keep an eye on because the market is divergent. The one of the market isn't catching up now. It means there is dissonance. It means there's lack of stability, lack of consonance, and this lack of consonance can be a little bit of a sign of inflection. Utility S&P 500 up until 100 years of history. From 1925 until 2025, 6602 as of now, all the way up from 55.75. It seems early this year, a significant push, and again 10%. Despite this push, it's 10% on a yearly basis so far. All right, New York Stock Exchange Composite Index is up significantly as well. An even better performance, it seems. Composite index, from Nasdaq, had taken a decent nosedive as of a couple of days lately, driven by poorer sales from the tech industry, lately saved by Nasdaq. By Nvidia itself, which was a little bit of a lucky save. But all in all, what we're looking at is that 30-year T-bond yield, the yield of a 30-year bond treasury bonds is right now quite high, and it's way higher than it was anywhere in the last 20 years or so. All right, we were last time this high, maybe 15 years, 20 years or so. This is definitely historical placement. And if you take a look at the very lows of the market for the 30-year bond prices, for the yield of the bond, of the 30-year treasuries, we were at the absolute lows because due to COVID, of course, because of selling the bonds and pumping the liquidity in the markets, but because of buying the bonds and selling the liquidity, putting the liquidity in the market, right there. In the end, this is what triggered the pace of growth, right? That was absolutely killing to a lot of financial companies, to banks, which blew up a couple of banks, right? If you remember Silicon Valley Bank collapse, which took down, quite a significant portion of startups from the Silicon Valley. This came from the fact of the financial distress taken from the pace of the rate hikes, right? Right now we've been definitely trimmed down on that side. 10-year Treasury note yield is on 40.63. It's consolidating as of the last 2 years. Again, significant push over the last 5 years overall, right? Significant short-term end of the yield curve itself. 3-month the Treasury bills and discount rate is right now 37.40. So we are back to normal in terms of the yield curve, right? The yield curve is healthy again. However, we had this yield curve inversion, and the yield curve inversion typically is a leading indicator of recession. So it makes sense that this year Later this year or next year, you can expect recessive um, issues. Silver is at the absolute highs, of as high as it's ever been. Gold, did we miss the gold? Yes, gold is an absolute highs, 4063 after massive rally, of course. That started, frankly speaking, at 1600s. I notified about 2019. There was a post I did about gold breaking the 1600s back then, after the significant gold bear market. Silver matches the crude oil, which is responsible for a significant part of energy market, is basically nosediving right now, which is overall healthy. Also a reason behind inflation dropping. And the dollar has been gaining on strength in the long term ever since 2008. However, lately, over the last 2, 3, 4 years, has been rather on the decline. With an except that if next couple of weeks, maybe couple of months, if you will, can be interesting enough to let me just show you the dollar chart that we have that we're going to look at. All right, so we're looking at a 50 what's it going to be monthly, and we wanted daily. Okay, doesn't matter. So here's a 50 month moving average in the black, and the so very long moving average, very long trend of the dollar. We are below this trend. We're undervalued according to the long-term dollar incline. However, we've been in an overall decline ever since 2022. All right. And of course, dollar strength is closely tied to how much money there is in the market. If there's not much liquidity, of course, dollar is going to be pretty strong. If there's a lot of liquidity, the dollar is a lot of supply of dollar, if you will. The demand per coin, demand per unit slips down. As a result, we see less pricing in the dollar index. Be mindful that USD as an index, that the DXY as a dollar index, is a basket of currencies, right? It shows the relative strength of dollar against the basket of currencies in the form of an index. So it's not just the price of dollar per se, because it's all relative to the free market and other currencies. So all things concerned, we did one more thing. Like I said, I brought up a couple of points about the cycle peak countdown that we did, and there was a pretty much whole bunch of let me just show you up here. There's a whole bunch of thoughts, like a train of thought that in the end placed helped get it all right. If you take a look, then there was a whole countdown series that I counted down, like 70 days, 60 days, 50 days, every 10 days. I counted down the projected peak until the very last moment. All right. So in August, not even before the end of August. Now, bull run ended 60 days. There was a 60-day notice. Cycle peak says Bitcoin is 93% down, as in 1,007 days in. Blow off tops are about to max out. And now you retire a bloodline or get absolutely wrecked. And that was a whole thread about this. However, every single post I did about that basically brought up a whole bunch of comments, which is quite funny to read in a hindsight and retrospective, because everybody said there was an idiotic post. It was a simply stupid thread that it's rubbish, that this time is different, that cycle is different, that cycle is changed, that four-year cycle is dead, liquidity is everything. In terms of like now it's institutions are here, so it's different. You must be unfamiliar with Bitcoin bull market. We're still in quantitative tightening. The bull run will be longer. Overall, the main consensus across the vast majority of the people, and when it's all in the extremes, this is where people get it right. When the majority is in the extremes of a brainwash, if you will, when there's one truth and nothing else is really allowed to really enter this room, then they're most likely wrong. Right? This is what happens when there's the absolute extreme fear and greed index, for instance. Let's take a look at it. Fear and greed index for crypto. All right. So we do look at 19 as of now. Jesus, so many ads. 19 as of the scale, and we're pretty much at the lows of the scale. It doesn't often happen that you're looking at these range of numbers. So in the end, there is a lot of scare. There's um, a lot of despair in the market, to an extent that we are most likely going to go up anytime soon, right? We don't know yet exactly, because that's unpredictable. We can make only so many predictions. And if I were to make a guess, about where Bitcoin is going to head next, well, then I would just simply try to open my Bitcoin chart. And before we get a proper wrap about this one, let me just show it on right here. It's going to be Bitcoin. Is it going to be that one? Yeah, that's the one that we're looking at. There's definitely been a death cross. There's definitely been a severe correction. Like I said, most likely we're going to get some decent pullback into the 105, 110,000, which are both correspondingly 50-day moving average and a 200-day moving average. So this gives us a little bit of a sandwich crunch, of an area of resistance to expect. So I wouldn't expect we will go way higher than this anytime soon. However, if we get a pullback there, I'm most likely going to sell the remaining portion of my Bitcoins, right? Because if the market is heading into the bear market, as all the signs show, because the 2026 is a bear market, calendar bear market time. And about that, by the way, we're going to have a session right after this one, so do not run anywhere. We're going to have a full session about the 2026 odds for the bear market from the godfather of seasonal studies, because there's going to be a whole bunch of incredible guests coming up. CMTs, CFAs, money managers, portfolio managers, and and then so much more of the incredible people that you're going to expect to appear. We're going to talk about how the Santa Claus rally and the January signals the shape for 2026 with Jeffrey Hirsch, the godfather of seasonal studies. That's a pretty strong combination, and I'm pretty excited for that one, because every single session with Jeff is a good one, right? So in the end, we're going to have a lot of session about that one. We're going to have a lot of understanding, double down on the development into what you can expect next year. With this session, with next session, with the entirety of the Trading Congress, which is why you might want to stay tuned, which is why you might want to give everybody a follow. Basically, Jeffrey Hirsch, everybody who you're gonna see on a screen deserves your follow for the hard work that they do. And there's a whole bunch of people, like I said, professionals that are there to teach you and give you an insight for free, which is quite worthy watching. So in the end, we are past the cycle peak a moment. It seems that it was timed a little bit early in terms of 5. Then the peak came 5 days, 10 days early. However, that anticipation, that countdown, all with the next bear market lookout for 2026, it made me cash out the vast majority of my money from July all the way to October, which is what makes me peaceful right now. Right? I'm not losing money because I cashed out mostly already. I was very vocal about it. So as we go, the next session, this one is going to wrap in a second. As you can expect to track the Burbness account. If you want to go to the Burbness account, then this is what's going to give you a very good glimpse into the overall agenda. Here is the post that I'm going to highlight right now for you. And grand opening as we have it right now, all this in the UTC time. How the Santa Claus rally in January signals shape, which is going to come right now. And then later on-chain insights and network fundamentals. It's going to be quite a pack of a session today as well. So you can expect this type of sessions for the next couple of days to come. Monday through Friday, at least, there's going to be a whole bunch of activities inside of our Discord, which is why if you haven't joined yet, go ahead to theburbness.com and you're going to have a whole Trading Congress pop up right there on the top. Click on it, start your Trading Congress. That should be theburbness.com Congress. Pop up, join now, and you're gonna get your free Discord membership. So go ahead, unite with our community. Come join one of the most trusted communities since 2017. We've helped a lot of people, And with this type of knowledge, with this grand opening in mind, this is literally an opening for your financial freedom right in front of you. For those willing to take an action, make sure that you follow again the Burbness. Make sure that you go ahead and get yourself a seat that after this session's end, you're going to still enjoy free access to our trading community behind the gates, behind the doors, behind the closed doors. And there's going to be a whole bunch of decent activities later on, which is why you might want to stay tuned. Ladies and gentlemen, everybody, I've been your host for this grand opening session. With all this introductory information, we are on for the next couple of days of Very Good Ride. The right next session I'm going to host with Jeffrey Hirsch, the godfather of seasonal studies, almanac trader, stock market almanac trader. Well, you can't miss that one. So after closing this one, make sure to tune in right in a second for the next one. God bless you all. See you around, and I'll see you in a moment for the next one.